Hello everyone and welcome to Financial Accounting with Anne-Marie Anderson. Today we will be exploring the accounting cycle. No, not an accountant on a cycle. That would be cool though, right? I mean this kind of accounting cycle. Even cooler, right? This is an accounting video after all. Okay, so what is an accounting cycle? The accounting cycle is the systematic process of recording, summarizing, and reporting a company's financial transactions from the initial entry to the preparation of financial statements. To better understand the cycle, let's meet Alex. Hi, Alex. He just started his own lawn care company, but needs a little help with his accounting. Alex knows he needs to record when customers pay him, but he also has to record his expenses, things like a new lawnmower, the gas to use in that lawnmower, tools, and don't forget about the cost of running an office with rent, electricity, internet, and office supplies. We record all those transactions in the general journal, and they're called journal entries. The date is recorded, debits first, then credits are indented next, along with a description for each transaction. The posting reference column leads us to our next step. It is a cross-reference to the ledger. The ledgers need to get updated for the journal entries so we know the balance of each account. For example, there were two entries to cash, a debit of $1,200 and a credit of $650, giving us a $550 debit balance. This is a 4-column ledger with transactions in the first columns and the running balance in the second set of columns. We take the balance of each account from the ledgers and record it in a trial balance. This is just a quick double check to make sure we didn't make any simple errors. If the trial balance doesn't balance, go back and check your entries because there's a mistake somewhere. Alex has been busy mowing and didn't realize the accounting part wasn't done just yet. Each month we have adjusting entries that aren't tied to direct business transactions. A common adjusting entry would be for depreciation on the equipment. The lawnmowers are used in the business and the wear and tear is typically recorded monthly in the general journal. With every adjusting entry in the general journal, the ledgers must also be updated for those changes. And once again, we prepare another trial balance, an adjusted trial balance with the updated ledger balances after the adjusting entries. Finally, it's time to prepare the financial statements. We take the ledger balances from the adjusted trial balance to prepare the income statement, the statement of stockholders' equity, the balance sheet, and the statement of cash flows. Each statement builds off the one prior, so they must be prepared in this order. Closing entries. You may hear of businesses at year-end talking about closing the books, and that's what this is. Closing entries transfer the balances of temporary accounts, revenues, expenses, and dividends to retain earnings to prepare the accounts for the next accounting period. In a nutshell, we're resetting our financial records back to zero so that we can start the new year with new data. We actually need to prepare just one more trial balance, a post-closing trial balance. Post means after, so after the closing entries. Get it? At this point, we reset all the temporary accounts, so what we're left with are the permanent ones: assets, liabilities, and stockholders' equity. That wraps up the accounting cycle. Thank you for watching. If you want to learn more about accounting, please see additional videos on my channel.